Welcome back to the Golden Wallet 60 Plus channel. My promise to you in every single explainer here is just this. By the time this lesson ends, you're going to know exactly what to do next. No confusion, no guessing, no wondering if you filled something out correctly. Just clear, confident, step-by-step guidance from start to finish. That's what we do here every single day. So go ahead and settle in, get your documents ready, and let's walk through today's lesson together, one step at a time.
Getting a notice from Social Security saying your Medicare premiums are skyrocketing, it's incredibly intimidating, right? You rip open the mail, see those massively high numbers, and honestly, it feels like a penalty you simply don't deserve. But I really want to reassure you right off the bat, you do not have to accept this blindly. There is a formal, really straightforward process to fight back and actually win. And we're going to master it right now.
Okay, let's dive right into our roadmap for today. First up, we'll cover the 2-year income trap. Then, qualifying life-changing events. Third, timing your appeal perfectly. Fourth, estimating your future income. And finally, gathering your proof and submitting the whole thing.
Let's kick things off with Section 1, the 2-year income trap. To fix this problem, we really have to understand IRMAA. That's the Income-Related Monthly Adjustment Amount. See, the Medicare system has a massive structural flaw built into it, and it's called the dreaded 2-year lookback. So if we're looking at your 2026 Medicare premiums, Social Security is actually basing those costs on your 2024 tax return. But think about your actual life for a second. In 2024, you were probably working full-time. Fast forward to 2026, and you might be fully retired, living on a fixed income. Yet the system is punishingly charging you based on money you literally no longer make. It's crazy, but it's how it works.
Just take a look at the breakdown here. The standard Part B premium is a pretty reasonable $202.90. But the very second your 2024 income crossed over $109,000 as a single filer or $218,000 as a married couple filing jointly, bam, you triggered those IRMAA surcharges. Suddenly, instead of the baseline, you're paying an extra $81, $202, or even over $400 every single month. And that's not even counting the extra hit to your Part D drug coverage.
Now, what's really interesting here is the potential payoff. If you're a couple dropping from, say, Tier 3 all the way down to the standard premium because your income dropped, you can save a staggering $9,240 a year just by fighting back. Yep, over $9 grand. That is a ton of money to just leave sitting in the government's pockets. So figuring out how to estimate your future income and clarifying exactly when to submit your appeal for maximum cost savings is absolutely worth your time. Let's get into how we actually do it.
Moving right along to Section 2, qualifying life-changing events.
So here's the deal. You can't just march up to Social Security and say, hey, I want a lower premium. You actually have to prove you experience a specific qualifying event. The SSA officially recognizes 8 of these: marriage, divorce or annulment, death of your spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, and an employer settlement payment. But listen, I want to place a massive emphasis on work stoppage. For the vast majority of retirees, this right here is your golden ticket. You stopped working, so your income stopped. Makes sense, right? Also, quick pro tip. If you received a severance package that spiked your income temporarily, that fits perfectly under employer settlement payment.
All right, Section 3, timing your appeal perfectly.
Knowing you qualify is really only half the battle. Clarifying exactly when to submit the appeal is how you lock in those maximum cost savings. Let's say you retired mid-year, maybe June of 2025. Because of that 2-year look-back we talked about, there's this frustrating gap where your 2024 full-time income is still haunting your 2026 premiums. Listen to me on this. Do not wait for the system to catch up on its own. You want to file the SSA-44 form immediately after your life-changing event occurs. Doing it right away prevents months of unnecessary expensive overpayments.
Now, I want to offer a huge sigh of relief for those of you who might feel like you're already a bit behind schedule. Even if you have been stuck paying that higher, unfair amount while waiting for your appeal to be processed, Social Security will actually reimburse those retroactive overpayments once your appeal is officially approved. How great is that? So seriously, get it filed.
Which brings us to Section 4, estimating your future income.
Okay, so explaining how to estimate your future income for the SSA-44 form usually causes the most anxiety. But let's make it incredibly simple. Your new estimated MAGI, which just stands for Modified Adjusted Gross Income, is actually just basic addition. It is not some complex algebra test. Step 1, just grab a standard 1040 tax return and look for line 11, your adjusted gross income. Step 2, find box 2A, which is your tax-exempt interest. Step 3, simply add those two numbers together, and that's it. That is your MAGI. Boom. Guesswork completely removed.
And this brilliantly illustrates exactly where that math goes. On the SSA-44 form itself, you'll see these little boxes asking for the tax year. You're just going to write in the year your income is dropping, say 2025 or 2026. And then you simply write down that exact MAGI estimate we just calculated together. Super straightforward.
But please, hear me loud and clear on this next part. Do not lowball your income estimates just to try and sneak into a lower premium tier. As your guide, I've got to give you a firm warning here. Medicare and the IRS, yeah, they talk to each other all the time, and they do audits. If you tell them your income is going to be $50,000 to get the cheapest premium, and then you file taxes showing $100,000, they're going to catch it, and you will owe all of those surcharges back. So play it safe, be realistic, and completely honest with your estimates.
Okay, final stretch. Section 5, gathering proof and submitting.
You've got the numbers. Now you just need to prove to the government that your income is actually dropped and get this form across the finish line. Basically, the SSA just wants a paper trail. The absolute easiest proof is a letter from your former employer stating your official retirement date, or even just a final pay stub showing your last day. But hey, what if your company closed down or you just can't get that letter? No problem. You can simply type up a Word document stating you retired on a specific date, sign it, and submit that. It's called a signed attestation under penalty of perjury. And believe it or not, it's a perfectly acceptable form of proof for Social Security.
Let's talk about how you actually hand this thing in. You've got two main options here. You can mail it, but if you do, you absolutely must use delivery confirmation so you know for a fact they got it. Keep in mind, though, mailing means you're going to be waiting around 30 to 60 days for an answer. Because of that, I strongly recommend taking your completed 3 pages and your proof in person to your local Social Security office. A representative will sit down, review it right there with you, and very often they can actually process the approval on the spot.
Well, we promised you clear, step-by-step guidance right at the start, and now you possess the exact formula to conquer that pesky IRMAA surcharge. So, I'm going to leave you with this. Do you have your documents ready to head to your local Social Security office and finally reclaim your money? Don't let the system overcharge you for even one more month. Get that form filled out, get yourself down to the office, and take control of your financial future today.